Hello, everybody. Welcome to a new episode of the Reinvent Money Hangout. My name is Paul Buitink, and with me today, economist and Bitcoin expert Tuur Demeester. And also we have a renowned gold expert, Koos Jansen, aka Jan Nieuwhuizen. We're going to talk about gold, Bitcoin, and the state of the economy. Feel free to ask questions if you're watching this episode. It would be nice to get some cool questions from the audience. Koos, let's start with you and
Yeah,
start to talk a little bit about gold. First of all, do we have to call you Koos Jansen or Jan Nieuwenhuizen? We're a bit lost here.
yeah, I have the same problem. Well, my real name is Jan Nieuwenhuis, so just call me Jan. But I started to Twitter a few years ago with the name Koos Jansen, and then I started a blog, and then I got a job in this worker field. And now I'm stuck with this Koos Jansen name, but my real name is Jan Nieuwenhuis. It's no secret, so I don't know what to do either. But my real name is Jan.
Okay, let's stick with Jan then. I will try to memorize because I'm so used to Koos. I think
Yeah, yeah,
last time I saw you, I also addressed you as Koos because it's just
yeah.
hardwired.
A lot of Chinese people ask me, please stick to Koos Jansen because we can pronounce that better than Nieuwenhuis.
Yeah, okay. So what's keeping gold investors awake at night these days?
Not much because we have lost so much sleep the last couple of years that. No, what I find interesting still Asian gold demand. That is demand from India is back on track. There were some severe import duties raised in India in 2013 when the gold price made a famous nosedive. They raised the import duty from 4 to 6 to 8 to 10%, and they implemented the 80-20 rule. And then this year they removed the 80-20 rule, and so there's a lot more official gold now coming into India, according to official customs reports, I should say, and not via the smuggling route.
What is the 80-20 route, by the way?
The 80-20 rule was a rule that all banks that imported gold had to export 20% of their imported gold. That was the 80-20 rule. Just meant to obfuscate gold imports and to just make it more difficult and to because the gold imports into India had a effect on the current account of India, and they wanted to dampen the imports. Now they removed the 80-20 rule, so gold import in India is quite strong again this year. In August it was 138 tons. In September it fell back to 50 tons. That's provisional data. So the Indians are on track to import 950 tons this year, and the Chinese are on track to import more than 1,300 tons this year. So and add to that Chinese mining supply, that is 450. Makes 1750 for the Chinese and 950 for India. So that's almost all of yearly mining supply. So the rest of the world and other demand has to come from scrap supply and disinvestment from ETFs and the like.
Because you're talking about net imports there.
Yeah, I'm talking about net imports. Yeah. All the numbers I mentioned was net imports. So, and the funny thing, of course, still is that the World Gold Council states that on average, Chinese gold demand is 1,000 tons. And while they are importing much more than that, and add to that they have a domestic mining supply of about 450 tons each year. So Chinese physical supply is clearly so much larger than what the World Gold Council is stating, that there is something completely wrong in their analysis, and that is really fascinating.
Why are they making that mistake then? Is there a hidden agenda, or is it just? I mean, if you're able to calculate that, these guys have all research departments. Why is there this discrepancy between your data and their data?
That is, I don't know. That is really speculation. If I could speculate, there is some hidden agenda indeed to let China accumulate more gold, and the World Gold Council sort of denies it. Although they have written some reports about there is more gold going into China, but we don't really know, blah 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 blah. But furthermore, it's not being mentioned anymore by big consultancy firms, and so that is really, it's so significant that this is about hundreds and hundreds of tons every year, and it's very often forgotten to mention this in the media.
It's at least it gives you this niche where you can become a specialist and the go-to guy for when it comes to calculating proper figures in China, India, and all of that. So, in a way, I guess it's good for you then, right? It gives you this market to work on.
Yeah, it indeed. Yeah. That is quite fun indeed.
Do you speak Mandarin, by the way, or how are you able to interpret some of these documents that are hidden somewhere on the internet or with these institutions? Do you have local people in China helping you? Or?
Yeah, correct. Yeah, so I'm very lucky to have a few sources in China mainland that help me a lot with the market there and with the language barrier. Because only when you find a way to work with this language barrier, you can really research the Chinese gold market. And so I owe a lot to those sources, and I don't speak any Mandarin, no, only Ni Hao.
Yeah. And what is the end goal here for China? How much gold do they want to accumulate before they make a next move, or what's the game here?
I don't really know. The thing is that according to my analysis, and I wrote a piece about this recently, also focusing on international gold trade. And in international gold trade, in merchandise trade statistics, we can only see the flow of non-monetary gold, and all monetary gold, that will be PBOC purchases, is not visible in these trade statistics. So everything we can see going into China is all, according to my analysis, of course I can be wrong, but it's all going to the private sector. So there is a lot of gold going into China, and it's more than the World Gold Council says. But that is all for the private sector. So we have to add to that demand from the PBOC. Now, Ronan Manley and Nick Laird did some research on the London gold market, and they figured out that in 2011 there was 9,000 tons of gold in London, and in 2015 it was only 6,200. But according to official trade statistics, only about 1,000 tons was net imported. So there is roughly 1,500 tons missing from London. And so these are again more clues, and that's all we can collect, because it's kind of hard to guess what the PBC has. But again, these clues are that this kind of gold can have been bought by the PBOC.
Can I ask a question, Niels?
Yeah.
So I'm curious about how you see the relationship of gold and the Chinese currency. The RMB got devalued recently, and for a long time in the gold community, and I guess a part of the gold community was convinced that the yuan would be very strong because China was accumulating all this gold, and the gold is going to be backing it, and now we're seeing the yuan weakening for various reasons. Maybe you can give your thoughts. And yeah, I'm wondering about. I never really bought into this story, but it really does seems to be breaking down the story of like the more gold is in China, the stronger the yuan could be. Or is this a long-term play? I'm curious about your thoughts about this.
Well, I think that the renminbi strengthened at first in the last couple of years because they are such a large exporter of goods and services, or goods, only about goods, I should say. But now because China is shrinking, or the growth is coming down, the stock market had problems, of course. Less and less people have confidence in China, so that pressured the renminbi, and then they let go of the peg. I think it was not really clever, but I think it's a move to also eventually let go, perhaps, of the peg for good, and to become included in the SDR for the renminbi. But I think the downside of letting go of the peg for a short while and then keeping it is that the whole world now thinks it's going to go further, and lots of bets are piling up on, the renminbi is going to devalue even further, and capital outflows. So it's costing the People's Bank of China a lot of money now to defend the peg. So I don't really think it was really clever. I don't know, maybe it's some master, plan they have. But I don't think that the strength of the renminbi has ever been determined by how much gold was inside of China.
Right.
Maybe, at a later stage that can relate to the amount of gold, but that then it would be more PBOC official numbers. And now the People's Bank of China says they have 1,700 tons, which is still very small compared to their GDP, foreign exchange reserves, etc.
Yeah, I mean, it really remains to be seen how hard the peg is really going to be. I mean, I'm reminded of what happened in France a couple hundred years ago, where after the French Revolution, the lands of the church were confiscated, and there was this new currency, and they said it has value because it is backed by all the lands of the church. But of course, nobody could take French francs and exchange them. I think it was a different name. I think it was the assignats. You couldn't exchange them for any land, so that was just rhetoric. And I think it really remains to be seen how much of that gold is going to be interchangeable for renminbi and back, or if it's gonna stay a story. I don't expect it to have staying power, and gold will be strong, and these fiat currencies will do what they do.
Well, I think only when you have a gold standard, then these official gold reserves can be redeemed for yuan and back. So,
right.
And that is never going to happen. I mean, the Chinese are not going for a gold standard, nor are the Europeans or the US or whatever. But what is, if you want to internationalize renminbi, you have to give it a certain credibility, and you have to, I think, need a lot of official gold reserves to support your currency. So this is the thing we're talking about, backing your currency with gold and supporting your currency with gold. So, and what I just mentioned was supporting the renminbi with gold. So if they come out one day and they say they have 4,000 tons or whatever, if they do, it would give the renminbi a lot more support to internationalize.
Right, so it's almost like an IMF requirement or a BIS requirement for China to have X amount of gold.
No, not really. No.
In order to be part of the SDR, to have they need to have a threshold or something. That for that reason they're accumulating it. Could that be the case?
Not that I know of. No, it's not an SDR requirement. I think, if I recall correctly, SDR requirement is freely usable. And what was the other thing? No, I can't remember this stage. Sorry, I'm a bit blurred. But no. The gold is not a requirement.
Okay. Well, let's move to
openness is also
yeah.
Openness about their data and foreign exchange reserves, and they have to comply to the special dissemination, etc. from the IMF.
Well, let's talk about openness, transparency, and the favorite subject of bankers, central bankers especially. There was this conference in Holland in September, Reinvent Money, that I organized, where you also were, Koos, and we had a central banker from Holland giving a presentation on macro prudency and transparency and all of these things. And afterwards you had a small chat with him. His name is Jacob de Haan. Could you tell us a bit more about this interesting chat you had with the central banker?
Yeah, so first of all, I want to thank you for organizing the conference, because it was kind of cool. There were a lot of good speakers at the conference, and I think it's the best conference we have in the Netherlands on money, on alternative ways to view money. So I was actually a bit surprised that you managed to get a central banker to speak there, but it was really nice. But his center point of his speech was transparency. Transparency is for central bankers very important, and he went on talking about it. So, of course, I thought about, well, if you want to be so transparent, why don't you give us the bar lists of the official gold reserves of the Dutch Central Bank? And unfortunately, I raised my hands when I could ask questions, but I didn't get the microphone. So after his speech, I went to Jacob and I asked him, well, if the Dutch Central Bank wants to be very transparent, can we talk about this? Because I did this is the Dutch equivalent of the Freedom of Information Act. It's called a WOP-verzoek. So people are familiar with this. I did that in 2013, and I asked a lot of questions. Where is it? Can we see the bar list, etc. And then I got a reply from the Dutch Central Bank saying we are exempt from Freedom of Information Acts. But this Jacob, and I think every European central bank is. But this Jacob seemed to be working with me. He said, "Well, drop me an email, and we go figure it out. Maybe we can, give you the bar list. We'll see." So I emailed him the next day, and I also did that last week. But he has never replied my emails. So I think I will call him this week and give it another go.
Yeah, I would definitely push for it. So it's because we now also have the German bar list. What do you make of that? And to me, I read Peter Boehringer's, who basically runs the gold expropriation or expatriation campaign for Germany, and he didn't seem to be too happy about the bar list. What are your thoughts on this bar list that the German Bundesbank has published?
Yeah, well, I agree with Peter, and of course, it's if you publish a bar list, why not publish everything? So also the refiner brands, the year of manufacturing, melt numbers, bar numbers, fineness, gross weight, fine weight, just everything. That is pretty standard in the wholesale market. If you only have an inventory number next to the bars, that is completely meaningless because you can't compare this Bundesbank list with other lists from Fort Knox or the Federal Reserve Bank of New York. Fort Knox has sort of a similar bar list published, only with melt numbers, so no refinery brands. So it's really weird. Why don't they publish all the data? I mean, what's the secret?
Isn't it just a way to pretend to be transparent and not actually be?
Well, that's what it seems. Yes.
Right.
Yeah, but it's not really. Of course, they know you guys are not going to back down, right? So they're buying time because they know that the gold bugs, they want full disclosure. So it doesn't really make much sense, like from a game theoretical perspective, for them to publish it. Or maybe like there's a lot of people then will say, okay, I accept this, and now for me the case is closed. But for the real gold bugs, of course, it only makes them more eager to get to the bottom of it.
Yeah, exactly. I mean, the mainstream media was all over it in terms of, this bar list is very extensive and comprehensive, and it's now all rumors have left, and we are like, well, this is not a real bar list.
I wonder if some of some of what's going on is that if one central bank were to be very transparent, then all of a sudden the challenge is out for the other central banks, but also it makes me wonder, like, what if there's certain bars in the Bundesbank that ought to be in another country? So, like, they would then become like inadvertent whistleblowers and cause a very uncomfortable situation towards these other central banks who all of a sudden have to answer all these. I wonder if that's what's going on too.
Yeah, I think that can be. I also thought it was a bit of a push, just first steps from the Bundesbank. Also to have a little push towards the Federal Reserve Bank of New York. Like, hey, we really want our gold back, and we are pushing transparency a little bit, just step by step. Just as they are repatriating their gold in 7 years before 2020, I forgot the exact number. They ship home so many tons, but not everything, So there's a little struggle, we know, between the Bundesbank and the Federal Reserve Bank of New York, and maybe this is just a little push again for more transparency.
Interesting. Well, let's move to digital gold. Tuur, a lot of. I see at least the price going up again over the past few weeks, so that always makes me happy. But what's going on in Bitcoin land?
Well, I have a few screens prepared, so maybe I can just go ahead and do a screen share. Let's see. Going to screen share. I think this is the one I want to start with. You should be able to see the Bitcoin obituaries. Is that what you see?
Yeah.
Yeah. So this is a screenshot, or this is how the situation was in early February 2015. There's a website, Bitcoin Obituaries, and they measure how many, or they try to harvest all the times that Bitcoin has been declared dead. And so early 2015, after just 1 month, the record of 2014 was almost broken. And this to kind of indicate how far we are at from that kind of sentiment. Back in 2015, really, things were incredibly bearish. The price had dropped all the way down briefly to $150. So that's where we were about 9-10 months ago. And then what we saw in early May, was that people like Alex Gurevich, who was former JP Morgan head of macro trading, so like not just a nobody, started getting excited about Bitcoin. And there was a number of other small signals that was happening. And then by August, we were clearly trading in a range. Bitcoin had recovered, it had gone up to 300 for 2 times. And we saw this range between $210 and $300 being established. And it was from then on that I started thinking that 200 really seems like a potential solid bottom. So I still think there's about an 80% chance that will be the bottom, and there's a small chance that we'll like have another drop to 100, but I think that's maybe like 20% chance. So going back, looking more recently, what we saw in about a week ago is that the 200-day moving average got broken again on the upside. So we went above $250, and I think that's a bullish sign because a lot of traders look at that level to see if the long-term trend is changing. And I think this could be a sign of change. And indeed, Bitcoin has gone up since. We've pulled back a little bit. And I think for me, the big story, what's happening is Bitcoin is becoming a credible story. There's all these very established institutions, Citibank, Barclays, New York Mellon, UBS, they're all experimenting with blockchain and Bitcoin. And so it is a very legitimate topic of conversation on Wall Street these days. And that's very different from a year ago. I mean, this is from October, the Bloomberg Markets cover, where we see Blythe Masters on the front page with a big article about blockchain. And that's the buzz now, that blockchain really is, the next thing. The Bitcoin was just kind of a signal for this blockchain revolution. And I don't really buy into that. I think Bitcoin really will be the TCP/IP. And one reason why I think that is that the sidechain technology is really being launched now, and people are able to experiment with it. There's the Elements sidechain people can experiment with, and Blockstream recently launched an actual working sidechain. Several exchanges are working with that, and that I think really is going to show that Bitcoin is scalable, and that Bitcoin also can have genuine privacy, because that's important for institutions who want to work with client money, but don't necessarily want to show to everybody, or want to protect the privacy of their customers, in other words. And so looking at the interest from investors, this is the Google Trends for how to buy Bitcoin, that's the term. Yeah, how to buy Bitcoin. So we see that it bottomed out in May 2015, but really started picking up again. And I think that, yeah, this could really be the bottom at 200, and then retesting 300, maybe go back again. So the channel could be in place for a while. But eventually, I think by before summer 2016, I think we're going to see a big rally. Summer 2016, by the way, is when the block reward gets cut in half again. So the inflation of Bitcoin basically gets cut in half again. So
there's this recent sort of the increase over the past few months. Do you ascribe that then to fundamental demand, or is there also something else at play? I read yesterday that a lot of it comes from China, most of the volume also. So do you believe this is investors are in there for the long run, or you think it's a lot of short-term technical speculation and trading? Well,
I don't know if I have the link here, but there's a cool website out there that shows the volumes on local Bitcoins. And local Bitcoins is a completely decentralized exchange that facilitates people on the ground in in a Starbucks in Buenos Aires to exchange bitcoins easily with somebody who has cash, and vice versa. So that really gives an idea of the on the floor, on the ground demand. And what you see there is that countries that have higher inflation really see a significant uptick in Bitcoin demand or Bitcoin volumes, trading volumes. So I think right now it's the wild speculators are burnt out. They're horribly burnt out after a year and a half or almost 2 years of a bear market, or I mean a short-term bear market, a big correction actually is what it is. So I don't think right now we're seeing a lot of speculators. I think we see value buyers, people who see the value, who know some of the risks in the financial system, and then also people who are starting to use it for remittance. People are using Bitcoin ATMs for these purposes to send money to Venezuela, for example, and also people seeking to diversify their portfolio, maybe just buy 0.5% in Bitcoin. And funds are also starting to buy Bitcoin. There are more and more possibilities for funds to do so in a way that's legal. And I mean, keep in mind that the Bitcoin ETF is still it's still being created. I expect that to launch somewhere in 2016. I think there are 2 or even 3 such initiatives. So I think that could be very. I mean, remember back in 2006 what kind of impact that had on the gold market.
Yeah, interesting. So
Can I ask Tuur a question?
yeah, sure.
Tuur, do you think Bitcoin has the best technology from all the cryptocurrencies? Because that is essential for the value of Bitcoins, right?
Right. Yeah, and then the question is like, what is the actual technological revolution that we're looking at? What's the disruption that's happening? And my view is that we're seeing the advent of the Internet of Money, and the Internet of Money has to be based on something that's ultra secure, because that's the hardest thing in the digital universe, is to make sure that something is not duplicatable. It's almost like a violation of digital physics, and that's really hard. And therefore, I think the currency that has the highest security, and that's not only because it has, the protocol is designed in this or that way, but also has to do with adoption. But Bitcoin very clearly is focused on very, very high security, and that's why this block size debate, for example, is so difficult, because increasing the block size has an effect on the decentralization, has potentially an effect on the security of Bitcoins. But even so, even if the block size is increased, it is by far the most secure currency out there. And with sidechains technology, you can basically create altcoins that are pegged to Bitcoin, that are backed by Bitcoin, by the Bitcoin security, that are mined and validated by Bitcoin miners. And I think that is massive, and I think that's really underestimated. The power of sidechains, I think, is widely underestimated, and that's why people see Bitcoin as like this inflexible, hard-nosed currency. And I think that's wrong. That's a wrong assumption. There's lots of innovation. I think the altcoins were a fantastic playground for trying new things, and some of them will survive, and I think some of them will thrive. But still, I think about 90% of the value, the economic value of all the cryptocurrencies is probably going to be Bitcoin for the years ahead. And I don't see a more secure currency on the horizon. There's currencies that say they have more applications, they have more utility, but there is no currency who claims to have higher security than Bitcoin for the moment.
Okay.
Yeah, and
Does that answer your question?
Yeah, it does. Yeah, thank you.
Tuur, you said earlier during your discussion about the price that you're not buying into banks embracing blockchain instead of Bitcoin. I saw today that Rabobank in Holland is working with Ripple, or they're going to use the Ripple network to do some transactions across Europe. What do you think of that, and how does that align with you saying that you're not buying into that trend?
Well, so I think to say that oh, it's all about the blockchain, Bitcoin is not what it's about, I think it's missing the point. And the point is that we need secure money, And of course, you can improve the way banks work by implementing some blockchain technology, by having secure ledgers, and you can make private ledgers and all that. But that's not going to take away from what Bitcoin is going to do. Bitcoin is challenging the notion that that money has to be infinite or money has to be centralized. And of course, I mean, banks operate in this old paradigm of we should be able to create securities out of thin air. We should be able to have creative accounting, all those kind of things. And so, of course, they're struggling with this blockchain notion. And Ripple is kind of hybrid. It tries to give banks the best of both worlds, or the customers. Well, banks actually. It tries to give them a little bit of the blockchain flavor, but from the saver's perspective, from the customer's perspectives, I think and there's several reasons for this, but I think your funds are less secure in Ripple than they are in Bitcoin, and that's why maybe in the short run Ripple will do fantastic, and it'll be a great way because they call themselves this adhesive tissue between all the currencies. So yeah, maybe it has its role to play, but I don't feel excited about investing in it. It could be, a transition. It could be a transition technology or a transition company, and that's fine. It could have its place, but I think, if you look at Blythe Masters, what they're doing is, yes, on the one hand, they are building their own private network, private cryptocurrency, but on the other hand, they're also building technology on top of Bitcoin. So they're clearly not so sure about betting on their own altcoin.
Yeah, I just got a message from Job Hartog, the regular co-host that just digitally spanks me on Skype, saying that Ripple's on the blockchain, which is Swift 2.0. So it is also the thing, everyone's using the term blockchain, but and a lot of people have, of course, different interpretations. And if we're just focus on the Bitcoin blockchain, then it makes much more sense. Okay, that's great. Thanks, Job. I'm now confused. Koos, any remaining questions for Tuur, or maybe Tuur have another question for Koos? Jan, too many names here.
Yeah. Well, Tuur, do you think it's a coincidence? Blythe Masters first worked for the commodity sector at JP Morgan, right? And now she does blockchain. First it was like gold, and now it's Bitcoin. Is that a coincidence?
How is Blythe Masters connected with gold? Is it? You mean?
I thought she worked for the commodities department at JP Morgan before she did this.
Oh yeah, I didn't know that. I think in general, a lot of people in the banking world really got burnt in 2008, and maybe not personally, but still they had a lot of heat, and I think. Especially the people that were in the eye of the storm are now I wouldn't know if I use the word redeem themselves, but they kind of became very aware of some of the risks of what they were dealing with, and I think that's maybe why some of this interest in blockchain and Bitcoin is happening. I'd be curious. I have never read about her connection with gold or maybe some of the ideas came from there. Like maybe she was first interested in gold and then looked at Bitcoin, like as in her general sabbatical, taking a break from the more Wall Street-esque investments. I don't really know. I want to read some more about that.
Cool. Tuur, maybe one final question for Jan.
Well, I know you don't do gold predictions and those kind of things, but still, I'm curious if you have any thoughts about what do you see more interest from the general investment community? Do you have any numbers from funds maybe that are diversifying more into gold, or about sentiment around gold, those kind of things?
Well, I think sentiment for gold in the West correlates to the price of gold we see in US dollars. So really, when the price of gold came down in 2013, I noticed that in Western countries, people are just looking at it as it's in a bear market and you don't buy anything in a bear market, so it's not interesting and it doesn't yield, so why would you buy gold? Of course in Asia it's the other way around, maybe, if the price goes down they buy more gold. I know my company Billionstar in Singapore is selling a lot more gold the last couple of years, also they started only a couple of years ago. So in Asia it's still really normal to just put some of your savings in gold. But I think the global price of gold, let's say the US dollar price of gold, really correlates to the trust the world on average has in central banking. And central banks appeared to have solved the crisis for Joe average. So a lot of people just go with what the central banks do. Don't fight the Fed. If they can print money and bail out every bank and whatever, and if Mario Draghi says we will do whatever it takes to save the euro, and people believe him, then they are not going to bend against it, and they will sell their gold. Until, of course, what I and maybe you also think that central bankers do not have unlimited power, and eventually, the tool of printing money will die, and what happens then is maybe a little bit scary, and that's why I like to have a few percent of my savings in physical gold.
Right. Yeah, I agree. I think the story of central bank omnipotence has not broken yet, but it's definitely more and more being challenged. I mean, the crash of the oil price, the incredible volatility in the Swiss franc, all these emerging market currencies that are really, like, you have to say crashing. They're really crashing against the dollar.
Mm-hmm.
And also the policy of central banks was incredibly harmonized for a long time. And I feel like now there's more and more of this tension where the U.S. central bank is not raising rates, but or is kind of thinking about raising rates, but then other central banks are not doing that at all. So like these policies seem to be drifting apart, and I think things like that could really break the credibility and break the story that, yeah, like central banks have all the power and they can just. It's interesting to me that the expression pushing on a string, if you look it up on the internet, one of the first definitions is, pushing on a string refers to being able to mitigate a problem in one way, but when things turn, you can't undo it. It's like you can't put the genie back in the bottle, and it refers to central banks. It's like, yes, they can increase inflation by printing money, but they can't put a stop on it. They can't do the inverse. So I think once we see central banks that are trying to lower inflation and failing at it, I think those kind of things could really break the trust in central banks. I mean, of course, slowly, because they have such a long track record of credibility.
Well, yeah, what I also find fascinating is that sometimes it's not even about printing money for central banks. It's just about their speeches, they say something and the whole market reacts on it, or about forward guidance, or and that is even thinner than printing money. That is just words.
Right.
So
it's almost. I mean, it really is like a church. Like you're listening to the priest, and then you have to like decipher what he's really saying and what he's implying, and how should I act? Because I know everybody's listening to the priest. So I'm actually not so much thinking about the priest. I'm thinking about how other people interpret what he's saying.
Of course, yeah. And it's also.
Go ahead.
Yeah, if you invest in whatever, in gold or stocks, I mean, if you want to make a profit, it doesn't matter what you think is going to happen to a stock or gold.
Right.
You should consider what the market thinks is going to happen with gold or stocks too. Right. And so everybody keeps having faith, so to say, at this point in time in central banks, and so the show goes on, and until it doesn't.
Right. Yeah. Well, let's see when the Fed lady will sing. At least you're prepared, Koos, with gold. Or do you also have some Bitcoin?
I also have some Bitcoin. Yeah, I started mining actually in, I guess it was early 2013. Yeah, when it made its famous run up. I really enjoyed buying a computer with a few friends, and at that time it was with video cards, right? And
Yeah.
we mined a few bitcoins, yeah. So I own a couple.
Oh, that's cool. Great. Well, thanks so much for being on the show again, Jan. I'm going to train myself to say Jan. And Tuur, of course. Last time was a year ago, so let's do it again in a little bit less than a year. Keep it like an annual update on all things gold and Bitcoin. Thanks, guys.
Thank you very much, Paul.
Okay, bye.